What's up, traders? Happy Saturday. Let's get diving into the weekly watch list here for what will be the week of October 4th. So, just to kind of set the tone here, where I think we're at is a short the rip kind of market, which basically means we're playing the same ebbs and flows, just hit at the downside. So, you're looking to short at the 21 EMA. You're looking to take profits after that flush down here to -2, -3 ATR. You can play the bounce back to the 21 with some short-term longs, but it's a short the bounce kind of market until we get 2 to 3 closes back above that daily 21 EMA. So, in terms of the ebbs and flows here, we find ourselves Thursday kind of pushing near -2 ATR. So there's where you take profits on your shorts, not when you're jumping into a short trade. And at this point, kind of sets the tone for potential bounce here back towards the 21 EMA. And I mean, daily charts here, as far as structure and momentum goes, they're totally bombed out. Whether it's the S&P 500, the QQQ, XLK, the industrials, you've got healthcare, transports, utilities, semiconductors, and communications. So, everything just bombed out here. No momentum, no structure, but again, where you do get that potential for the bounce is when you're just crazy oversold down here at 2 to 3 ATR. So to catch a bounce back at the 21, two things we could focus on are ready aim fire signals on a multitude of different time frames, along with a few lower time frame squeezes. So a good example here, I'll kind of start a discussion of potential bounces this coming week. Looking at the communication sector here, it's been one of the stronger trends in the market, and you are getting a ready aim fire buy signal here on your daily chart. You got one setting up here on the 4-hour chart, so you're getting some oversold buy signals here. You could trade XLC this week if the market does make a rip higher. With XLC, you're basically talking Google, Facebook here. And I would lean a bit more towards Google. So in terms of where can we find a ready aim fire buy signal in a squeeze, nothing here on that daily chart. But here's a 4-hour chart with a ready. So we're getting pretty close here, but if the 4-hour chart has a ready, we could look for, say, a squeeze on a 2-hour, getting a buy arrow, no squeeze there. Something like this, though, right? Where we go into next week, the markets are a bit oversold here. Google's got a ready aim fire setting up on a 4-hour chart, and you get a 30-minute squeeze. So depending on the overall market, I think you could look to potentially build a position inside that 30-minute time frame, looking for a pushback to the daily 21 EMA. And keep in mind, these are sketchy daily charts, so you are going counter trend here. You've definitely got to keep that in mind. If, for whatever reason, the market doesn't bounce next week, then down goes Google. But I do think you could set something up like this with a good risk reward for a short-term trade. So the target to the upside here would be the daily 21 EMA around 27.85, and I think you keep a tight stop on it. I'm probably looking to close a trade here on a close below last week's lows around 26.70. So something along the lines of, and we'll see how things open up here. Google's a bit of a tough one to read as far as premium goes on the weekend. So this might not be accurate at all. But looking for, a at the money, out the money, put credit spread, going a few strikes out here potentially. And I think you can get a quick paycheck if you catch that bounce back here to the 21, but I do think you could cut the trade off. I think you could keep your loss smaller than your potential gain here with a close, with an exit on a close under 26.70. So those could be combinations at work as far as catching the bounce once the market is oversold at -2, -3 ATR. Look for a series of squeezes on lower time frames, but then also try to line it up there with a ready aim fire buy signal. You do have that here on the 4-hour chart for Google, and if you look at the Qs, you're going into the weekend here with a 4-hour squeeze and a ready aim fire buy signal. So the tone is kind of set here for a potential bounce. Another name you could look here, I think, would be something like a Home Depot, where your daily chart actually looks like significantly better than the Apples, the Facebooks, and the Googles here. To take it down to a 4-hour chart, got your ready, get your aim, you're waiting for your fire here. So kind of the same thought process. Could a Home Depot bounce back above the 21 EMA? Could it bounce back to 338 up here at +1 ATR? it certainly could. So those are a few potential spots for call that, that oversold bounce. Just understand you're going counter trend. So I like the trade idea there on Google. Something we're probably going to keep an eye on in my mastery. However, if the market just continues to go lower, you're getting stopped out. Pretty good chance of that. So, you got ideas like that as far as oversold bounces into the 21. But then if we do get, a 2 to 3 day window here where the market is making a solid bounce back to the upside, you could also look for a few longs in spots that aren't oversold. Rather, they still have a good bullish structure. So I think Tesla's a good example here. Weekly squeeze firing to the upside. There's a good-looking daily squeeze here with support at your AEMA. And I would think next week, potentially, that 2-hour squeeze could fire long, giving you the push back through 800. Now, you do have delivery numbers coming out this weekend. And as of right now, it's just about 9 o'clock Saturday morning, so I don't think anything is out in that regard. So it could be a total wild card here. But in terms of structure, I think you get 2 to 3 days of upside in the market. Tesla should be poised for a solid move. And another one here that we traded last week, taking profits on Thursday, is Netflix. Probably the best looking setup here in the market, just in terms of you still have your structure, you still have your trend, but you also have a crap load of bullish momentum, which I think is really important here. So we're taking that position at the 21. We're taking profits up here at plus 2 ATR. But with a short-term window of strength in the market, that 4-hour squeeze could lead to some more upside. So keep an eye on Netflix here. But in the event we do get back to the 21 with the indexes, that I think is where you're looking to take profits on your longs. And if we do get rejected again, that's where you're looking to put on a few shorts here. So, a few different ways you could skin the cat as far as going short. With the mindset here that this month, at the very least, right, with these ugly daily charts, at the very least, it wouldn't be crazy for us to come down here to minus 1 ATR, ATR in your weekly chart, which is about 42.40. So a trip down to minus 1 ATR, let's check this out. So you could buy puts, you could sell out the money call credit spreads. You could also take a bit of a smaller position size and structure a trade where the risk reward's really stacked in your favor. So a good example of this could be, say, let's go to SPX. All right, let's go to SPX. We'll go to the end of October. So instead of selling an out the money call credit spread, which obviously I'm a fan of, where you're risking more than you could potentially make, you could instead make a bet and say, hey, I think, at some point during the month of October, the SPX is going to be trading well under 4,300, which, let me do the quick math here. Or, I won't do the math. I'll let the little calculator do the math here. But it's not a huge move for us to get down to 4,300. So, jumping in here a bit more. All right, so we're at what? Where are we at right now? We're trading at 43.57, and a move down below 4,300. That's 1% and change. So, realistically, if the month of October is a weak one, that could happen, in a morning. So, what you could do here is do an in-the-money call credit spread. And the nice thing about the SPX or the NDX is you're not too worried about cash. Not too worried about getting assigned here. Is there cash settled? But you could do 4,300 by, say, 4,310. You're getting good credit here. You're getting $7.20 of credit. And you're risking $2,800 for a max potential profit of $7,200. And obviously you get that $7,200 if the SPX is trading below 4,300 as you approach expiration. So let's take a look here. All right. Let me just kind of get this in line. Maybe 30 contracts. I'm just trying to get this risk up to 10,000. Maybe 40 contracts will do it here. All right, close enough. Right now, again, this is all kind of relative to account size, all that good stuff. But you risk 11,000 here to make just about, call it 30,000. Now the question is, if I do this call credit spread, where do I lose my $11,000? where do I get that max loss? So if we analyze the trade, let's get rid of a few more down here. Let's get rid of, let's see, get rid of that one. All right, so if we analyze that trade here, let's put this on the expiration date, October 29th. We got that here. So say you get a trade with a similar credit here, $7 and change on Monday. Come Friday, right? So come October 8th, how much will the market have to bounce for us to be down the $11,000 max loss? Let's see. Looks like $11,000 of a loss is coming in around 47.40. So let's mark that up just to get a sense of how crazy does the market have to get here to hand us that max potential loss. I did that wrong. 47.40, that can't be right. 47, no, that is right, 47.40. All right, that's a huge bounce here. 47.40. So you're talking a pretty significant bounce here. I mean, we're talking like ripping right back through all-time highs. So the likelihood of you quickly taking that max loss, pretty unlikely there. Now, what if we just simply get a few closes back above the 50? This market starts to stabilize a bit around 44.50 or so. Well, around 44.50, you're down about $5,000 or so dollars, which, a couple closes back above 44.50 is probably where I would look to go cut the trade. So in that regard, you're aiming for a $5,000 to $6,000 loss, again, on a trade where max profit is a bit closer to $30,000. Now, let's say a week into the trade here, we got some good timing, and the market flushes down to the weekly -1 ATR at 42.50. Well, into week one here, if we flush to 42.50, you got an open profit of about $8,000. Now, if by week 2 here, October 15th, we're trading under 42.50, then you're looking at about $10,000. And then obviously at expiration, $28,000. So, again, just looking at a few numbers here, you structure the trade where you're comfortable with the max loss. So it could be one contract, but I kind of like that here in this market, where if you do think there's a big probability that we're going to head lower, you can kind of structure something like that where that risk-reward is drastically stacked in your favor. Now, if we do bounce here to the 21 EMA this week, I think you look for the same exact spread, and the risk-reward is going to be even better at that point. At that point, say we bounce to 44.10, 44.10, you're talking selling calls here, $100 in the money. So the equivalent right now as far as what that risk-reward is going to look like would be closer to, selling the 42.50, buying the 42.60. Somewhat similar, but those are a few things to keep an eye on here. That's just kind of where I think we're at right now. You can get a few squeezes and a few ready aim fire buy signals down there at -2, -3 ATR. But then on that bounce back to the 21, if we get rejected, that's where I think you're looking to sell some call spreads for another leg to the downside. So structure those how it would make sense to you. You could be a bit more, you could lean a bit more into the probability side of things, go a bit further out the money, do an out the money call credit spread. You could go in the money. Different ways to skin the cat, like I said. But there's a few things to keep an eye on here. So Tesla, Netflix, they still have good looking daily structures. They could potentially make a nice move higher with a few days of strength in the market. And then names like, the communications sector, technology, and Google, you got a couple of signals there. So a few things to keep an eye on. Hope you have a good weekend, and I look forward to seeing you all on Monday for some pre-market prep. Talk to you then.